it's not so wildly different from market expectations because one print isn't everything, basically, right? It's really the trend of the prints over multiple months that we're looking for. And you know, it does seem as well that with the 0DTE crowd piling in on options, there's this natural kind of mean reversion that goes on intraday. So while you might get a print that then makes the market move, people who've bought options to play such move then unwind them after the move, and then it mean reverts again. So you're kind of not getting as much close to close volatility as you're getting intraday volatility, which means the price of the straddle doesn't necessarily need to be as high because you get that mean reversion. And I think that 0DTE flow is exacerbating some of that.
That's a fantastic point. And we can actually see that kind of play out in real time. The flow today, the 0DTE flow, in particular in the S&P, was so fascinating. It highlights exactly what you're talking about. And we've been doing a little bit of a longer term study in the kind of TLDR study of the 0DTE stuff, is that it seems to actually on net be suppressing volatility in the S&P. I think obviously the Carvana calls is a different story or whatever, but what you can see here in white is the S&P 500 price. And then in purple is all options flow, the deltas, right? So as we move up on this chart, the purple line goes up. That's positive delta. So that's driven by call buying and put selling. And then down, obviously, is put buyers and call sellers. And so what you can see is with teal being 0DT, but what you can see is that as the market opens at 4,100, there's positive deltas coming to the market. And I think a lot of that is actually put covering or volatility selling off of the print. But then when we get to 4,150, all of a sudden those deltas drop. And you can see the deltas drop sharply before. And what that is call selling. And so I can actually break that out here. And I'm doing this to make you look good, Imran, because it highlights your point almost exactly that, you know, you can see very clearly here as the market hits a high, we get sharp call selling, put buyers come back in. And then as the market hits the low, what happens is the reverse flow comes in, right? If I sold the 0DT call at 4,150 and we're at 4,100, that 0DT call is worth nothing anymore. I'm going to cover that position, right? Or I may sell puts at 4,100 because I think the market may turn and go back up. And so you can see these flows really come into the market here and kind of back up. I'll try to make it look a little bit more simple again, back to the original state here. But you can see these flows come in and really interact with the market. And again, I think you're right. And that is a massive volatility kind of, it's like one of those finger traps, right? Where the harder you try to move, the more options flow comes in, the more things kind of get really locked in. And as you see here, we're tricking a little bit lower on some of these deltas as the market has shifted back up to the 4120 to 4130 area. So to your point again, the volatility is high, but it is really getting suppressed, I think, by the 0DT stuff.